Good day, everyone. Today we're going to discuss analyzing and journalizing transactions using special journals. Accounting information systems were paper-based until the introduction of the computer. So, special journals were widely used. When accountants used a paper system, they had to write the same number in multiple places and thus could make a mistake. Now that most businesses use digital technology, the step of posting to journals is performed by the accounting software. The transactions themselves end up on the transaction files rather than in paper journals. But companies still print or make available on the screen something that closely resembles the journals. Years ago, all accounting records are kept manually. If a company had many transactions, that meant many journal entries are to be recorded in the general journal. People soon realized that certain types of transactions occurred more frequently than any other types of transactions. So, to save time, they designed a special journal for each type that occurs frequently. For example, credit sales, credit purchases, receipts of cash, and disbursement of cash. We would enter these four types of transactions into their own journals respectively, rather than in the general journal. Thus, in addition to the general journal, we have to have the sales journal, cash receipts journal, purchases journal, and cash disbursement journals. Sales journal for the sales on account, cash receipts journal for all cash received, purchases journal for purchases on account, and cash disbursement journals for all cash payments. Note that we have two systems of recording inventory transactions. We have the periodic system and the inventory system. The main difference between special journals using the perpetual inventory method and periodic inventory method is that the sales journal in the perpetual method will have a column to record a debit to cost of goods sold and a credit to inventory. In the purchases journal using the perpetual record method will require a debit to inventory instead of purchases. Another difference is that the perpetual method will include freight charges in the inventory account, while the periodic method will have a special freight in account that will be added when cost of goods sold will be computed. So remember this. Um, if there are no rec- uh, if there are no recurring transactions and the recurring transactions are not so voluminous, all the transactions will be recorded in the general journal. But considering in almost all businesses, merchandising businesses, the bulk of the transactions pertain to credit sales, sales on credit sales, credit purchases, receipt of cash, and disbursement of cash. So instead of recording this every time the transaction occurs in a general journal, we're going to record this in special journals, which is in a form of a summary. So it has already a debit and credit. So the recording will not be so tedious. So these are the special journals. The special journals are journals which will record recurring transactions such as credit sales, credit purchases, receipts of cash, and disbursement of cash.